Good evening to all our mentorship traders. 30th of April 2021, 9 p.m. Indian Standard Time. Mentorship Invest Meet, Friday evening, like always. We've come to an end of a week, end of a month. It's been volatile, but not much gains or loss in terms of price. First, we'll look into the Nifty, Bank Nifty, and few sectors, and then later on go in discussing about trading and investment opportunities. Well, I have the Nifty futures daily chart in front of us here, and we've got a pretty smart bounce back from the lows of 14,150 odd, touched, teased the 15K mark up here, and today, Friday, it lost 200 points. So this 15K mark over here is turning out to be quite a interesting, important zone. Now, I'll come back to the daily chart in a few minutes. Let me show you the end of the month. We have two successive flat months from the Nifty, the month of March and April. These are like spinning top doji kind of a patterns, wherein you see a decent amount of upper and lower shadows, meaning the markets failing to hold on to the gains or losses, volatile. These 2 months essentially tries to showcase is essentially a consolidation. It is consolidating, trading, taking a breather after this one-way rally. Now, coming back to the daily time frame from a short-term perspective, it is this psychological 15K mark which is going to be important. If you observe the price behavior from mid-Feb now to the end of April, you can more or less say that we've got this 1, 2, 3 times we've had this kind of a bounce back. I'm ignoring this bounce. This was that dramatic day when the exchange was shut and then it was open till late evening. I'm ignoring this move. I am considering this bounce back, which is around 5.5% in 3 days. And then we've got this bounce back from this low to, let's say, take this high, which is again around 5.5% in 8 days, because it took a little bit of breather here, or else it would have been around 4, 5 odd days. And this one, the recent one that we have, is around 6%, which took around 5 days. So 5 to 6% kind of bounce backs is what we have noticed in this entire period from the mid-Feb. So the underlying short-term trend is up. The intermediate trend on the daily time frame, I'm using the 75-minute time frame, this one, to figure out the short-term trend. Now that for me is up. The moving averages has turned up pretty well. Psychologically, it's the 15K mark that the market needs to take out. That's for sure. What should we do? I think strategically we should stay cautiously bullish in the market. The kind of momentum, the participation that the index has shown from all the other sectors, I think it will be too early based on the 200 points fall that we had today to straight away turn around and go bearish. Cautiously bullish can be a better word, but I think that the index will try again to take out or tease that 15K mark on the upside. On the downside, on the flip side, so if you take a look at the 75-minute time frame where we closed today is more or less near this high, which is the 16th April high. Now these levels are 14,700, 650 odd. We have seen time and again that highs, when they become lows, what I mean by previous resistances, when they become current supports, they give a sign of a strong uptrend. Now, if this happens early Monday, if 14,650, 700 holds and the market bounces back towards 14,850, 14,900, then the chances of 15K and taking out 15K will be very, very high. On the other hand, if it slips below 14,600, if it comes down to 580, 550, 500 in this zone, if you find, so the high did not manage to hold, then we are again back to this kind of a market, which we are dealing with for a couple of months now. which is volatile, and we will have to act accordingly. But as of now, till that happens, let's keep our bias cautiously bullish. Bank Nifty, financials, private and public sector banks are the ones that led this rally, and it has turned into an uptrend, which is really good. Now for the Bank Nifty, the resistance is close to its early April highs. Now this is very clear from this daily chart of Bank Nifty. It's around 34,300, 200 kind of levels. If you allow, we can have a pretty wide range. I will check this with a line chart. Now, essentially, the index needs to deal with this zone. It's got a pretty wide zone, 400, 500. So 34,000, 35,000. So we're looking at a 1,000 point range for the Bank Nifty here. But good to see that the bounce back came pretty sharp from valid supports. That's also a very important point. Highs becoming lows and supports holding. These are very good signs. And for the Bank Nifty, I think it's going to struggle between 34K and 35K. And we can turn around and become like bullish really once it takes out the 35K mark. Till that, I think it's going to stay volatile. It's going to face some supply selling for sure. So all eyes on this index. It matters, around close to 37% weightage, I think, in the overall market. Metal is one index which went into a new life high thanks to a big 21% gain this month. Now to evaluate the monthly gains, I've come here to the RRG charts under the stockcharts.com, and over here in the tail length I have reduced it to 4 weeks, sorting the sectors, and we see metals, big performer, huge relative strength, huge momentum. We will continue to consider this sector as buy on a dip unless it gives us signs of any signs of reversal. Now this is Cnx Metal, big 21% kind of a move in the month of May, in the month of April, heading towards the month of May. Weekly charts are holding pretty good. Daily charts, you might call this a bearish Harami pattern, a little bit of short-term pattern, but the index has held really well. Buy on a dips have worked very well. Good stocks like Tata Steel has outperformed. So let's not try and predict the top, rather stay with the trend and look to buy on the dips. Cnx Pharma is the next one, which is up close to 9%. Now this is a very interesting phase for the Cnx Pharma index. Let's take a look at the pharma chart. Now the monthly chart of pharma would be showing you some good strength. It's gained around 9.5%, inching back to its life high. Weekly charts are a clear sign that it's gone up 6 consecutive weeks, this bounce back from these lows. And now over the last 2 weeks, you can see some amount of shadows coming in, the length of the body dropping. So maybe signs of early consolidation. It might take a breather. We did see some movement into today's trade, but overall it's a healthy trend, and one should not predict a top. On the other hand, looking at the RRG charts, it's picking up good momentum, which means that it will be eyeing the breakout soon. So we would consider pharma as a breakout candidate. We will consider pharma as a buy on a dip. Next, it's essentially small caps, commodities. So over the last 4 weeks, it's been kind of flattish in between. On the losing side, it's real estate. You've got the PSU banks. We've got the auto here as well. Now, what I would like to share, what I would like to discuss is, if I want to sort this in terms of the tail, and I want to bring your attention to pharma. We spoke about this, FMCG and consumption yet again. The last time we discussed this, if I increase the tail length around, something like this. If you look at the consumption, it is hovering, it is just going in circles between lagging and improving. Last time we were talking about this couple of months back, it was improving, but then from improving, rather than going to the leading, it came down to lagging and now improving again. So it's going in circles. And if you've been following our videos, you know that these RRG charts move always, they move clockwise. At times they might go round and round, then go like this, and so all this kind of drama they will do, but essentially the flow is always clockwise, always. So having said this, is this yet another chance for the consumption and the FMCG to outperform going ahead? Possible. So keep an eye again on FMCG counters and the consumption stocks also. So these are the two spaces that we will keep a close eye. Apart from that, buy on dips. We spoke about metals. Small and mid caps are doing pretty good. Your public sector enterprises, we've been talking about them for quite some time. They're performing well. And energy. We spoke about Reliance, if you remember, I think so. Reliance picked up really well. I think Reliance did amongst the non-banking stocks, the stocks which are not in the financials. This stock is the one which picked up really well. 2060 on the upside, the short-term resistance, if it takes it out, it's going to zoom further up. The longer-term picture of Reliance is not that great. It's stuck. We can see this is a weekly chart. It's stuck in a range, but it's been good for from the point of view of trading, and that be it, I think this stock is on the verge of a trend reversal going forward. Today it was down 1%, got some good support from the psychological 2000 mark, but keep an eye on this. This guy can continue to outperform the market going ahead. So overall, let's sum it up. The sectors have been performing well. The metal seems to be performing really good and now can slow down a little bit. I don't think so it's going to happen, but all eyes I think should be on FMCG, consumption, pharma, Reliance and energy stocks that we spoke about. And when metals and the other banking stocks, those which gave a rally, if they come down, one can look at them as a buying opportunity. So staying overall cautiously bullish on the market, and hoping that Nifty will find strength to test that 15K mark and take out this red zone. So 15K mark for Nifty and 35K mark for BankNifty are the ones that are very important from a bullish perspective. Till then, I think we should not, or I would say we should give this current bounce back some scope to show further strength, or else we are fine dealing with volatile markets. We've been doing this for the last 2 months, so be it. For the month of May, we'll see what's in store for us. All right. Now let's move ahead and let's talk about some trading and investment ideas.